The callability trap for high-yielding bonds. Hello everyone and welcome back to Markets with Markus. So for the first time in 4 days, Treasuries ended up with higher yields across the entire range today. The 10-year ended at 4.07%, the 30-year even at 4.72%. Those are not bad rates. It's not the peak rates anymore that we've seen before, but it's still attractive levels when we look back over the past 10 years, like for example, the past 10 years for the 30-year Treasury, you can see that it's still a pretty good level. So what do you do if you want to lock in those rates now? For Treasuries, that's very easy. You just buy the Treasuries and you are pretty much done, because Treasuries are never callable. That means as long as you have them, the government will pay you those promised yields until the bond matures, and you can cash in your payout every 6 months. Of course, locking in those rates is nothing you should do lightly, especially if it's for 10 years or even 30 years, where the rates are highest. The 30-year is a long time period to commit your money. If rates go down, you'll be happy to have locked it in, because you'll keep those rates. But if rates go higher in the meantime, and you need the money, you may have to sell your Treasuries at a lower rate if you need the money before. So our recommendation is always only lock in those rates if it's a no-regret move for you. Be flexible. Dollar cost average. Don't put all your eggs in one basket unless you have a very strong conviction. But of course, if those are rates you need, you want, if you feel better, sleep better at night, if you have 4.7% locked in for 30 years, then do it. It may be a good opportunity before rates go down, as they may or may not do once the Fed starts cutting rates next week, as they will most likely do. So that's Treasuries. But what if you're tempted by agencies who have an even higher yield of up to 5.25% for 30 years at the close of the markets today, or corporate yields that are even more attractive? So depending on the rating, corporate bonds in the investment grade range can pay you 5.52 to 7.12% over the next 30 years. So not bad rates, and similarly to Treasuries, if that's something you can live with, that will make you sleep better at night, you may want to lock them in now. But neither agencies nor corporates are Treasuries. So be aware of the callability trap for these higher yielding bonds. What is the callability trap? We got a question from Joseph, one of our members, about this recently. He's seen a lot of longer term agency bonds, not the very long ones, but the middle to long ones, called recently. And he wondered what we should make of that and wanted us also to share this with our community. So the callability trap means that the issuers of agencies and corporate bonds can sometimes call the bond early. That means redeem it before the bond matures. If they do that, if they have the right to do so, which is always specified when you buy the bond, so as soon as the bond is issued, you will always get the interest that's promised to you, that's due to you up to the moment the bond is called, and you will usually get at least the full face value of the bond back when the bond is called. Sometimes you get even a bit more, which is always nice. It's a premium call. And in very rare cases, you have even a make-whole call. That's a call where you get even all the interest that was due to you until maturity. Those are rare though, and then in this case you don't really need to worry about callability. But if you like those attractive yields and you want to lock them in, but it's a callable bond, be aware that you have this callability trap potentially, that you have a reinvestment risk. Because yes, you get your money back if the bond gets called early, but you'll need to find a new investment opportunity if you don't use the money immediately. And that may be at a much lower rate than what you got before. So be aware of that. In that context, Bloomberg recently published a study that showed that about 3/4 of both agencies and corporates are callable these days. That is a much higher rate of callability than what we used to have even 10 years ago. Especially investment-grade corporate bonds didn't really used to be callable. When you had an investment-grade corporate bond, it was almost as good as a treasury. It wasn't really callable. You knew as long as you had it, you could count on those coupons coming in. But it has changed. So 3/4 of all new issues for outstanding bonds are generally callable. Be aware of that. And when we had a look at the recent new issues that are on Fidelity's website for recent agencies and for recent corporate bonds, basically all of them are callable these days. And that's not really surprising, given that everyone expects a rate cut. So why wouldn't an issuer put in a callability clause to protect themselves? Because if rates go down, they can pay back the higher yielding bonds that they issue now, refinance at a lower rate. Of course, you would expect that you get compensated by a bit of a higher rate for that callability risk. But again, you may not keep it forever. How likely is it? That's another question we get a lot, that bonds get called when rates go down. There are some studies out there that found that if rates move just a little bit, bonds often don't get called immediately. There's always transaction risk, refinance risk. It's work to issue a new bond to refinance. But once rates start going down by about a percentage point, a lot of the bonds get called. Now, usually the moment the 1% rate cut threshold is reached, about half of callable bonds get called. And if rates keep falling, the percentage goes even up. So over time, if you have a callable bond, the likelihood of being called is pretty high. As we always say here at Diamond NestEgg, if you buy a callable bond, it really only makes sense if you can live with both extreme outcomes. One, that it gets called at the earliest call date. You get your money back, you have reinvestment risk. But you also need to be able to live with the opposite, that the bond gets never called, and you have the bond until it matures and get only back your money then. So yes, do look at callable bonds, don't exclude them from the beginning, but you need to be sure whether that's something for you and you need to understand the risks. So back to those attractive rates that are still attractive. What can you do if you really want to lock in today's rates? And if we really stay in that world of what can you do, there are really three options you have. First, as we said at the beginning, buy treasuries. Once you have them, the rates are locked in. They're not callable. They're never callable generally. So you keep those rates. Second, in a similar way, you can lock in rates with annuities. Annuities often have even rates that are a tiny bit higher, depending on your circumstances, on the rating of the insurance company, than treasuries. They're locked in. They're also not callable. But they're not for everyone. Annuities have a very specific profile. Needs to fit your plans, your circumstances. So if you're interested, as we always say, send Jennifer an email at jennifer@diamondnestegg.com. She can get you in touch with our trusted annuity provider if you want to explore whether that would be something for you. If you're tempted by the higher yields of agencies or corporates, as I said, all new issues currently are callable. So relatively high likelihood, if we think today, that they will be called when the Fed starts cutting rate. So your best way of locking in those rates is going to the secondary market, looking for bonds that have been issued a while ago, and there look for those who are not callable. That's probably your best bet at this point to lock in the higher rates for agencies or corporate bonds, if you're inclined to do so. So that was Markets with Markus for today. Thanks for listening. Stay tuned for more updates and stay tuned also for our member live this weekend, where we'll go into more detail, discuss a bit more the current rates, whether it makes sense to lock them in under which circumstances, and how you can do that in the long run. Have a good evening and see you soon again at Markets with Markus.